Welcome back to Next Gen Investing. Now, Meta Platforms is lower today following reports that it could be postponing the release of its AI model, Avocado. So joining me now is Sam Vadas, host for Schwab Network, for some more insight into this story. And so, Sam, down 3.5% here.
Yeah.
How significant is this to Meta's overall AI push? As we know, it's been expensive for the company.
It certainly has. And I think the answer to the question is, Jenny, it depends on who you ask, because I did hear a trader on the floor here today who actually holds a position saying, not too worried about this headline. There's lots of negative headlines out there at the moment. The tape is very sensitive. But the way that I would frame this story as an analogy is that you go to the fruit bowl, you pick up the avocado, it's a bit firm, you need to wait until it's a little bit more ripe. That seems to be the story here with this negative news coming from the New York Times, who is reporting this, that they have indeed got this rollout of the new AI model that's been pushed back after performance concerns here. So that's the headline. The timeline here. Looking like it could be at least May from this month, reportedly. It did look like Mark Zuckerberg, who had been really pushing ahead with this, had been targeting for release this month, but now it has been pushed out. And that's, as you say, Jenny, really spending a lot of money on trying to get this cutting-edge technology out there. So it's unlikely that they're going to reportedly hit this deadline here. It now appears that the new model has fallen short of performance of leading AI models, as I heard you before the break, like Google, OpenAI, Anthropic, and internal tests for reasoning, coding, and writing. So perhaps just not up to scratch as they would like yet. Interestingly, the Times does point out that previously it had outperformed Meta's previous AI model. It had performed better than Google's Gemini 2.5 from March, but it has not performed as strongly as Gemini 3 from November. As we know, there's been a lot of praise around Gemini since then, and obviously that has helped Google's stock as well. A lot of praise coming from the likes of very influential people as well. I think it was Mark Benioff who did talk about that too. What's important with this story here, though, Jenny, is how Meta's AI model does perform is what is being very closely watched by the street and the market right now. So obviously we've got Google, OpenAI, and Anthropic, which are all regarded as being ahead for now. And that's important also from the perspective, as what we've been talking a lot about over the last year, from a perspective of how to attract talent to your product, because we know that Meta has been growing out this super intelligence team. It's been trying to pluck a lot of top engineers and people from other companies and paying them, attracting them with huge eye-watering salaries. So this news is significant because also we've had Meta's other projects falling short in the past of expectations. You think of, Llama 4 and also the metaverse. So I think that's perhaps what's weighing on the stock today, but I would put it into context. All the Mag 7 is lower today. In fact, it's the NASDAQ that is really suffering the most. So I think there are just general concerns around technology for us in this session, Jenny.
Yeah, and I mean, especially when you look at this week, we're down about 4.75% this week, which it's not like we've seen a huge winning week for tech by any means, but there are still some pockets of strength, just not, fortunately, being reflected in Meta shares on a week-to-date basis. But we did also get some reports from Bloomberg of this increased data center spending for Meta. And so how significant is that to this conversation?
I think that's really significant because it's all about the spending and the hidden costs. So Bloomberg's really been looking at the quarterly filings here. And what they've found is how big tech, broadly speaking, a number of companies are actually trying to lock in massive data capacity. And so you've got major cloud companies like your Metas, your Microsofts, your Oracles, your Amazons of the world committing huge amounts of their money to future data center leases. So that's what it's really looking at here. You've got Microsoft and Meta adding about $50 billion in new lease commitments last quarter as they've looked at some of their filings on off-balance sheets for now. And I think that is something that's going to be really important for the market to look at, as it's not just the AI disruption fears and the valuations here. It's also been about the funding that has been a really big question for these markets this year, Jenny.
Yeah, and I think a good call out to Oracle. I mean, I feel like that was, we've had so much news this week. It's hard to keep track of what was what, what happened, when. And I think that with spending and some of these overall just credit concerns, Oracle to me is like the depiction of that. But Meta also facing, some severe capex spends. They have to see growth to obviously be able to continue to write this narrative. But so appreciate it, Sam Vadas, host for Schwab Network, for all that breakdown today on Meta Platforms, which unfortunately closing out the week on a negative note.